requesting income taxes and paycheck stuff, but this is going to be phasing out very soon. That means that very soon you're not going to need to present bank statement, paycheck stubs and income taxes. All you have to do is an affidavit, which is the hardship letter stating what is your hardship. So that is a good thing. But this rule has not been in effect yet, but they're going to start coming up in effect very soon. Okay, second rule change. Vacant and rented properties. The property can be rented for or vacant for up to 12 months prior to the short sale approval, as long as it can be proven that the house was primary residence prior to be rented or vacant, and the homeowner has not purchased another home for the last 12 months, blah, blah, blah. Basically what this means is the following. In the past, it has to be owner-occupied. The property has to be owner-occupied. Right now, you can actually have a rented property or a vacant home, which I don't recommend. I still don't recommend vacant homes. But they can have a renter occupied as long as the property was primary residence within the last 12 months. All right? And that's just great, because some people actually have rented out the property. Relocation. Relocation no longer has to be work-related, and there's no minimum relocation distance. That means that if you were relocated by work before, they had this rule that says you have to be relocated over 35 miles of your current employment in order to participate in HAFA. Now you don't have to. As long as you can prove that you're being relocated, even if it's only 2 cities over, you're still okay. Less than 35 miles is okay. The sixth key factors for HAFA. You are walking away from this home free and clear. Free and clear. You're walking away from this home free and clear. You're not going to owe anything to the banks anymore. Furthermore, it says, let me see, where does it say that? I don't have it here, but it says, the rule says that there's not going to be a promissory note either. They cannot ask you to sign a promissory note. And how many of you have been working on short sale transactions and you're like a week before funding and the lender says, oh, oops, we forgot. They need to sign this paper. And they send you the paper over and it's a promissory note for $100,000 that they have to pay back. And that completely kills your transaction right there. Okay? With HAFA, there's none of that. Provides financial incentives for homeowners. Yes, they give them $3,000 for relocation expenses. They are giving the homeowner $3,000 for relocation expenses. Provides financial incentive for lenders. Shorten the time for approval to 10 days. Real estate commissions are pre-approved and unchangeable. This is important too for some of you guys who have been doing short sales. They give you a commission of 5%, for example, and at the end they're running short on money, and all of a sudden they're cutting off your commission. And they're taking the money from your commission. This one here says they're approved and unchangeable. and foreclosure proceeding stops. Yes, the foreclosure proceeding will stop. As a matter of fact, somebody was talking to me in the restroom. Not a nice place to talk, thank you very much. But somebody, I'm like standing there doing my own thing, and this guy is talking to me, right? Okay. No, man. You people are bad. Okay, so anyways, I'm standing there, and he's talking to me, and he says, well, Ronnie, well, the loan modification stopped the short sale. And I said, well, yes and no, like I gave you the answer before. If you get assigned a negotiator, yes. If you don't get an assignment a negotiator, no. This is the rule for HAFA. If the package has been submitted and they acknowledge receipt of the package, your trustee sale stops. If they acknowledge receipt. Now, the key word is that they have to acknowledge the receipt. That means that you have to receive something back, like an email. For some of you that are using Equator, you need to receive a task or something that says that they have received the package. If they receive the package, the trustee sale stops. They don't even have to assign a negotiator. And that is great news. Remember I said at the beginning, we have been able to stop trustee sales even one day before they go into trustee sale, and that's the reason why. Because we submit a complete package, but it has to be a complete package though. It has to be a complete package with everything that they request, and that will stop the trustee sale, even one day before the trustee sale. You have to be a little proactive, and you have to call them and make sure that they put it in the system, because sometimes they forget. But yes, it can be done. All right, homeowner signs an affidavit declining participation for HAMP. Homeowner has already been evaluated and found eligible for HAMP. Property is borrower's primary residence or was a primary residence in the last 12 months, as you see in the update from February. The mortgage liens originated before January 2009. Yes, if your loan originated after January 1st, 2009, you cannot participate in HAFA. For the most part, all the consumers you're talking to, their loans originated in 2006, 2005, 2007. 2009 is not a big problem. And loans amounts are lower than $729,000. That means no jumbo loans. Now, I was asking a negotiator one day, and I say, you know, I find it unfair that loans over $729,000, like $1 million, $1.2 million, $1.3 million, are not part of the HAFA program. And this is what she said to me, and I found it a little bit comical. She said to me, Ronnie, if you owe $300,000 to the bank and you're behind on your payments, you have a problem. If you owe $1.5 million to the bank and you're behind on your payments, the bank has a problem. You know what I'm saying? It is in their best benefit to help those people with jumbo loans. And they do that. Believe me, they do. All right. So, and the last condition. Mortgage is delinquent. Now, this is key. This here is key for you guys in your business. The mortgage is delinquent or default is reasonable foreseeable. Default is reasonable foreseeable. How can I foresee that a person that is not behind on their payments yet is going to get behind on their payments? Well, let's consider the following. All their credit cards are maxed out. They have non-sufficient funds in the bank statement. They ran out of money in all their savings accounts. Do you foresee that and they don't make enough money to make the mortgage payment? Do you foresee that these people, even though they're not behind on their payments right now, they may get behind on their payments in the future? That is foreseeable. You have to document it correctly, and you have to make sure that it's done correctly. For some of you that are going to get into this situation, you really need to talk to me. So you need to call me and set up an appointment. We'll discuss it. But here's the key for that. You don't have to be behind on your payment to participate in HAFA. And how is that important? Here's how it's important. It says, I copied this from the HUD department. I just edited a little bit, but this is exactly what it says. Lenders recognize that short sales save them money, and they prefer to do short sales rather than foreclose on properties. If borrowers cooperate with the short sale process rather than going into foreclosure, it is easier for them to get into a home in the future. Fannie Mae's new policy, as of last April, if a borrower participates in short sale, they can purchase a home within 2 years. 2 years, rather than 5 or 7 years for foreclosure, bankruptcy, or deed in lieu of foreclosure. FHA's new policy as of April 5th, 2010. If you were not behind on your payments for 12 months prior to the short sale, you can qualify to buy another property immediately after the short sale. You see how that can be powerful? You get somebody that is not behind on their payments. They haven't been behind on their payments for 12 months. They can short sale, they can request the short sale approval. They get the short sale approval. They go through escrow. They close escrow, and now they're eligible to buy again under FHA guidelines. Do you see that? That is powerful right there. The key word here is that they're not behind on the payments for 12 months prior to the short sale. Another thing is that they have to rent for a little bit, because I talked to my underwriter regarding this, and she says, yes, it is doable, but the short sale has to appear on the records on their credit. How long does it take for them to get the short sale in the record in their credit? Anywhere between 30 to 90 days, depending how busy the bank is when they report it to the credit bureaus. So they will have to rent for a little bit. How long do they have to rent? Usually between 3 to 6 months, unusually, because they can start looking for homes right after they did the short sale, okay? So that's the key. This is the guideline. It's straight from the guidebook. It's straight from the guidebook. It says, when a previously owned property was sold for less than what is owed, short sale, the borrowers are considered eligible for FHA insured mortgage if, as of the loan application date, all mortgage and installment payments were made within the month due, that means they're not behind, for 12 months preceding the short sale. That's what the guideline says specifically from the book. And I just actually copied the screen from the book because I wanted to show it to you. And you go here and it says, this says pre-foreclosure and short sale of prior property, non-delinquent mortgage, no late mortgage payments made in the last 12 months, no late payments on any installment debt, that's credit cards and so on. Subject property is not located in the same geographic area as the property in which the short sale was completed. I asked my underwriter, what do you consider the same geographic area? And this is what she responded. She said, well, I would suggest to you, she said, not having the same neighbors. That's what not being the same geographic area. So I said, so basically we can move them over a mile off? She said, yeah, that'll be fine. As long as they're not in the same geographic area with the same neighbors, basically. You know, that's the only condition that they have. And then the next condition is this. Well, proceeds of the short sale serve as full payment. And we already discussed that. HAFA, no liability. You're walking away. You don't owe anything to anybody. And the next thing is, it says that the property that you are purchasing has to be valued less than the property you short sell. That means if you short sell your property for $400,000, the property you're buying has to be lesser than $400,000. How much less? $399,750. It doesn't matter. They just say it has to be less. You see what I mean? Why do they do that? Because they want to prevent people from short selling their homes just because they want to get a bigger home, a nicer home, a more expensive home. Because that would be considered fraud, and they don't like that. You see? That is the only reason why. But can you move somebody from a 4-bedroom home to another 4-bedroom home, from this short sale for $400 now to $375? Absolutely. Within a few months after they did the HAFA short sale. So that is powerful right there. How does HAFA begin? Well, first of all, you have to be evaluated for HAMP and not being approved. All those people, you know those 6 million packages that are being rejected right now? Those people that are being rejected, they automatically approved for HAFA. Number one. And number two, you can request to participate in HAFA, and that's why they need you, because you can make that request for them. And we're going to go into the package in a second. The homeowner can receive the letter or request the application by themselves or talk to you, which is what I recommend, of course. Here's the thing. The bank this is great news for you guys. The 8 million people that are going to be denied for loan modification, as soon as they get denied for loan modification, the system automatically spits out this letter right here. And basically what this letter says is, I'm sorry, you did not approve for the loan modification. That's the first thing that it says. And the second thing it says is the following. If you're looking for help selling your home and avoiding foreclosure, there's a new program called the HAFA program. And then it says, we will start by approving a listed price on your property or give you an acceptable sales proceeds. Okay, we will identify the seller's costs, etc., etc. And then you then list your property like any other home with a local real estate broker.
I like that.
You like that?
Yes.
I love it. They are getting this letter. You think that they're not getting this letter? Everybody's calling me because they're getting this letter. Ronnie, I got this letter in the mail about something called HAFA. I don't know what it is. You have to make sure that everybody knows that you know about HAFA. You have to make sure that they know that when they receive the letter for HAFA, they call you. So you can go and explain it, because it's about 6 pages of information that they won't understand. Okay?
You say they have to be late on their mortgage to go for the first part. So then they cannot use the second part, the short sale, and be approved for the next purchase if they are late.
I'm sorry, I said that they have to be behind on their payments?
To apply for the modification.
No, they don't have to be behind on the payments. I never said they need to be behind on the payments. One of the questions that I often get from loan modification is, can I apply for a loan modification if I'm behind on my payments? And the answer is yes, but you don't have to be behind on your payments to apply for either the loan modification or the short sale. The only company that you have to be behind is Freddie Mac. And that's why I said I don't like properties owned by Freddie Mac, because they are the only ones that force you to be 60 days behind on your payment in order to apply for loan modification or short sale. So I hope I didn't.
Maybe I have.
Yeah. Okay, anyways, receiving the approval. The bank, once you request the HAFA short sale, is going to send you an approval that is going to look like this. Actually, this is page number 2 of the approval. And it says, this is the price that we want for the property. This is the commissions that we're going to pay. This is all the costs that we're going to absorb. This is the $3,000 we're going to pay the consumer. And this is how much this is the earnest money deposit that we want. And this is the down payment that we want, which would be probably a minimum down payment. And this is the amount of money we need to get net. Now, let me ask you a question as a real estate agent. If I give you this piece of paper that shows you how much money the bank wants, how much are they willing to pay, and how much are they going to pay for closing, seller pay closing costs, etc. Do you think you can put that in the MLS and get an offer based on that?
Yeah.
Absolutely. You can get an offer. You say, this is what the bank approved. $300,000, they're going to pay 3% seller concessions, they're going to pay 6% commission, whatever. Do not send me any offers unless you meet this criteria, basically, right? That would be okay, right?
Right.
Okay. And then after that, I don't know where I put it, you submit that offer to the bank, and they have a guarantee that they will approve you to go to escrow within 10 days. If you make an offer that matches what they're asking for. You see what I mean? Okay. FHA rules. The homeowner may be required to pay a monthly payment while the house is in short sale, but this payment cannot exceed 31% of their current income. If the borrower is unemployed, they may not have to pay anything. Some people were choosing not to participate in HAFA because there was this window of opportunity that the bank would they would need to pay a certain amount of money while they're going in the short sale. As of today, I haven't seen any bank asking any money from the borrowers. None. Okay, the window's open. They left it in the guideline just because for the opportunity for the banks to do it in case they need it. But I haven't seen anybody asking for money yet. Lien release. The services must release all liability. Additionally, the investor must waive all the rights to seek a deficiency judgment and will not require the homeowners to sign a promissory note. Following the successful short sale, the homeowner is entitled to $3,000 for relocation expenses. It's a great program. I mean, this is what they're doing right now. Listen, you do this, and within 2 years, within 3 months, for some people, they can buy again another property at a cheaper price, something that they can afford. Yes or no?
Yeah.
Yes.
If 3 months doesn't work because they're already behind on the payments, 2-year conventional with 20% down payment. If that doesn't work, 3 years FHA with 3.5% down payment. I mean, they are begging people to do the short sale because they know, as well as I know, as well as you should know, that unless we get rid of all this excess inventory that is totally upside down, our economies will not be able to move forward. We need to get rid of all this inventory that is upside down. Otherwise, we're not moving forward. Then that's what they realize. Okay, servicers incentives. The second, in the past, the second would get a maximum of 6%. Okay, right now that's open, so they can get whatever they want to get, whatever the first is willing to give them. The government will refund the bank $2,000 to pay off lien holders and $1,500 for administration expenses. This one here, I'm not too concerned about, but this one here, watch this. The government is paying the bank $1,500 for every short sale approval they do. One day I was asking a negotiator, and I asked her, and I said, by the way, hon, how many short sales do you process on a month? She said about 50. 50 short sales for one person. Multiply 50 times 1,500, that's $75,000. And they're paying this person $17 an hour, which plus bonuses, whatever. They're paying this person $5,000 max, okay? The bank is making $70,000 off of every negotiator they have working the loans for every single month. I mean, that is huge. When you're processing 5 million short sales every single month, that is huge. Huge money, right? And I was going to show you a video, but I'm running a little bit behind. And if I have time, I'll show it to you before we end. If we don't, you should watch this video here, which is going to be part of the package that you're going to get. Guidelines for short sale. Okay, statistics. 8 million homeowners are currently not paying their mortgage. 5 million additional homeowners have no equity in their home. 2.5 million loan modifications will be denied. Actually, this is more than that. 14 million homeowners will face a choice between foreclosure or short sale. The choice is clear. Foreclosure will prevent you from owning a home for 7 years. Somebody was asking me outside, by the way, they say, Ronnie, you know, I know a lot of people that are doing bankruptcy and they're letting the house go on foreclosure. And this is what I say to you. Do the bankruptcy. I don't care if you do the bankruptcy or not, really. I don't care. Don't let the house go on foreclosure. You know why? If you do a bankruptcy and a short sale, you can still buy a home in 2 years. You can. With a bankruptcy, it's 24 months. 24 months and 1 day. Short sale is 24 months and 1 day. With a foreclosure, you have to wait 7 years. 7. So even if you did a bankruptcy, still do the short sale. What is the benefit of letting it go into foreclosure? I don't understand. And that's why you need to ask the person, well, what is the benefit of letting it go in foreclosure? Well, I don't want the bank to come after me. Well, they won't, because you already did bankruptcy. They're not going to come after you on that sense. And the second part of it, if you do the half a short sale, the liabilities are fully released, so they're not going to come after you. So what is the problem, basically, right? Okay, some forms that you don't need to know about. Some of you, particularly if you're very analytical like me, will want to see all of the guidelines. So I'm giving you access to all the guidelines. You have the quick reference guide, the complete directive, the program differences, the revision, the sample letter to homeowners, etc., etc. There's about 750 pages of information there, so be my guest and go ahead and read them. That's what I had to go through to put this seminar together. That's where I got all my information from. So the guidelines are there. I don't recommend you to read them, but you know. Okay, very fast. Short sales step by step. Short sales step by step. Now short sales is going to be a little bit more steps than a traditional loan modification. For loan modification, there's only like 5 steps. On a short sale, there's a little bit more, but we're going to go through those really fast. Short sale step by steps. Number 1, you need to tell people about the list of documents that they require in order to do the short sale. So if you click on the button, it's going to bring up that list. Does it look familiar?
Yes.
It's exactly the same thing. It's exactly the same thing. So remember when I said some people come for loan modification appointments and we turn them into a short sale? They already have everything that we need in order to do a short sale with them. There's really nothing else that they need. Okay, so the documents are the same. And the short sale application, it works exactly the same way. But it works exactly the same way, except this application has more disclosures. This application has a lot more pages and it has a lot more disclosures. It works exactly the same as control replace. You replace all the things. In less than 5 minutes, you have a complete package. Do not use a loan modification package for short sale. Do not use a short sale package for loan modification. The disclosures are different. Some of the things are going to look exactly the same, like the authorization letter, the financial sheet is going to look the same, but some of the other forms are not. So please do not get them confused. That's why I'm giving you 2 guides, 2 separate guides. The stacking order for short sale. The stacking order is right there. You can see it right there. Authorization sheet, financials, paycheck stub, bank statement, listing agreement, short sale addendum, notice of default listing agreement, HOT 1 if you're doing a traditional one, MLS, etc., etc. We're going to go through the steps in a second. So I just wanted to give you an idea of the stacking order. Like I said, the stacking order is pretty simple. You just check off whatever you have in the package and make sure that you have everything that you need. The loss mitigation package to prevent foreclosures, I already explained that. Authorization form is the same. Financial sheet is the same. Hardship letter is the same. Authorization to release credit information and legal and tax aspects is the same. Affidavit of request of non-participation to the HAMP program. Remember I told you that some negotiators still believe that they have to go through HAMP in order to get approved by HAFA. That is not the case. As a matter of fact, we have this addendum here, which I've been sending over, and I said, listen, my borrower or the borrower doesn't want to participate in HAMP, and here is what it is. And they usually accept it. So you shouldn't have any problems with that. A status change notification. Remember that I told you that through the process of the loan modification, you may want to turn it around and do a short sale. This is the form that you want to use right there. You want to make sure, what I want to make sure is that you get them to initial that they want to change from loan modification to short sale. And the reason why is this. Once you get the short sale approval, and I had this case, sometimes I had this case that some people will come to me and say, you know, I went to this guy to do a loan modification and he ended up doing a short sale and I lost my house and, you know, I don't like him and I'm going to sue him or whatever. I want to make sure that if you do change the program, make sure that you get it signed so later on nobody says that you coerced them into doing something that they didn't want to do. That's basically it. Okay, so that's that. Notice of default listing addendum. Notice of a purchase agreement listing addendum. This one here is for the seller and this one here is for the buyer to sign. Short sale disclosure, another one. And the hold harmless agreement, of course, and then the presentation. I am not going to read you all the disclosures. You can take them home and read them at your own leisure. I already read them too many times. I know them by heart. By the way, talking about knowing something by heart, please read them before you sit down with the clients. So at least if they ask what they are, you have an idea what they say. You go like, well, you know what? As a matter of fact, I've never seen this paper before. Let me see. Yeah, that is not very professional, if you ask me. Okay? All right. Then you have to do the HAFA application. You have to do the HAFA application. And the HAFA application is coming up in a second. Give me 1 second. There you go. Does it look familiar? Yeah. And all you have to do again is change here from keeping my home to selling my home. And then if it says if the property is listed for sale, say yes and put your information in there. Everything else is the same, so I'm not going to spend any time with that. The DOD frank and the 4506 is the same, so I'm not going to spend any time with that. Okay, how does the short sale begins? First of all, somebody will call you and say they want to do a short sale, or you have an appointment in which you're turning somebody from a loan modification to a short sale. You have to let them know the list of required documents. You don't have to make an appointment for that. You don't have to meet with people to tell them that. I already said that. Collect their information, prepare the short sale package, which I already showed you, the DOD frank and the 4506. Step number 3. Step number 3 says, well, step number 3 used to say you have to decide whether or not you want to do a traditional short sale or a half a short sale. In this case, we are going half all the way, like 99.9% of the time. So you don't have to think about that. All right? So get everything signed, collect all the paperwork, get all the signatures, and that's just that. Here we go. Step number 4, pitfall number 1. This is where most of you are going to get frustrated in life and you're going to curse the day that you started doing short sales. I promise you this. I tell you this thing, guys. If you don't take care of these things at the beginning, they're going to come and bite you in the behind at the end. And you are going to lose your transactions. And you're going to be wasting all of your time, effort, and money trying to put a transaction together that had no chances of closing from the beginning. All right? So, let me start from the beginning. Pitfall number 1. With the property information in hand, you need to figure out how many liens are against the property. You can send an email to your title company, and they can do that for you. You can send an email to Orange Coast Title. That's the one that we use. And in the body of message, write, please, I need to know how many liens there are against the property and how much is owed, or something of the sort. People will forget how many liens they have against their property. I am at fault at that. Mea culpa. I was doing something, I don't remember exactly what it was. Somebody asked me how many liens I got against my property. And then I forgot that 3 years or 4 years ago, I replaced the windows in my house. And we had an installment loan for $10,000. And they put a lien against my property. I didn't even know. I didn't even remember. I didn't know. I remember signing and notarizing some papers. But I didn't know they were going to put a lien against my property. So it was a surprise to me that there was a lien against my property for $9,000. I didn't even know. Your borrowers will not remember either. And this is the problem. When you're doing the financials, when you're asking the lender,